Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be talking about BFT and Paysafe again, but today specifically we're talking about price targets. Now on this channel, whenever we talk about price targets for any stock, there's always a financial analysis that underpins what we're going to talk about, and that's the case here too. So in this video we're going to talk about those price targets, we're going to run through the analysis which gets us to those numbers, we'll talk about why they're reasonable and why that perhaps makes sense, and so if you're interested in BFT and Paysafe, then this one is definitely one you want to stick around for. Quick spoiler alert, it could be around $35 to $45 per share, so you don't want to miss this one. Now I apologise if you are getting fed up with the BFT or Paysafe videos on this channel. I do promise I have some other exciting videos on different SPACs. However, on this particular one, I do feel there's quite a lot of videos misreporting things or saying things which are inaccurate, which need to be addressed. Apologies if you're not interested in BFT or Paysafe. This definitely won't be the last one either. So if you're not interested, then don't waste your time with this video. However, I do guarantee the next few videos on this channel are definitely going to be worth your time. If you're new to the channel and you like investing related content, then smash that subscribe button. I do put a lot of work into every video that I upload onto this channel. You spend your very valuable time watching this, and I don't want to create a video that just tells you things you already know. So I always want to make sure that any video on this channel is always informative and interesting to viewers. And that does require a lot of work and research. If you appreciate that, please smash the like button. It's also so helpful in pushing the channel to a wider audience, and it's massively appreciated. Whilst my full-time office-based job is investing, I'm not a financial advisor. This video is purely for educational and entertainment purposes only. I always feel this is especially important in videos like this where I'm sharing my own analysis. I don't have a crystal ball. This analysis is all the function of the numbers I've put in and the assumptions I've made. So always make sure you do your own due diligence before you make any investment. But let's get straight into it. So if you're just here for the price targets and are not bothered about the rationale and why this makes sense, then this is the part you want. If you believe that Paysafe and BFT should be trading at the same level as other integrated payment platforms are, then this would imply that Paysafe should be trading around $22 or $21.66 to be precise. That's assuming, as per the investor presentation, a 31 times forward EBITDA multiple. Now personally, I don't think this is the right peer group to be looking at, and I'll come on to why in a minute. However, let's look at the next part. If instead you believe that BFT and Paysafe should be considered more like a focused payments business or an e-commerce payments business, and should be trading in line with those peers, then actually the share price should be closer to $29 or $28.68 to be precise. Now I do think there's a stronger argument for why it should be valued in line with these peers. However, there's also a case for why it should be valued differently from that as well. Now we'll come on to why this perhaps makes a lot of sense in a minute. However, if you believe that the superior growth prospects, the sector alignment, the diversification, the potential M&A firepower that the business has should ultimately command a premium valuation to the rest of the peer group, then there is a valid argument for a share price of around $46 or $45.83. Now in the description below, I'm going to add a comment and pin it in the comment section which explains why the multiples of these have been chosen, why they make sense, and how we've come to each of them, as I think discussing that at this part of the video could get a little bit boring. But definitely check that out in the comment section below if you're interested as to how we've come to those multiples, especially the multiple of around 60 times which we've used for that upper end of the valuation range, implying the $46 share price. However, that being said, a lot of people are probably asking right now, and rightly so, why is BFT and why is Paysafe undervalued currently? Now part of this comes down to the fact that not everyone wants to and not everyone can invest into SPACs. There is definitely the risk that the transaction never completes. And yes, whilst your downside is somewhat protected by the net asset value or the floor price, there's also the opportunity cost of having deployed capital and parked capital in an investment which may not generate the same return. There are a number of professional investors and funds which are not allowed to invest in SPACs. This is written in their fund documentation, partly due to the greater risks with SPACs, but there are also other factors playing into this, such as the level of financial disclosure. When investing in SPACs, you don't have the same level of financial information that's readily available as is the case with fully public companies or during an IPO process. This is a risk, and for some funds it's very material. So for all SPACs, there is a potential audience of people who may want to invest in the company, but can't whilst it's a SPAC. That means they're only able to invest in the company once the merger is complete and once the ticker's changed and the company's trading on its own ticker. So the next question which people are probably asking is, why should BFT and why should Paysafe be valued at a premium to other companies in the market? And as we discussed in a previous video, there are benefits from being larger in this market. However, Paysafe has some really exciting sector alignment which gives it some really exciting growth prospects. The first one of these is the online betting and the online gambling sector, one which is forecast massive growth over the coming years and where Paysafe is one of the leading providers. Recently in the US, we have seen a number of states allow and regulate online gaming, both online sports betting and online casino gaming. And whilst this trend is forecast to continue, there's a strong case for the argument that actually this trend is going to just accelerate. Hear me out. There's a number of states in the US which are in challenging financial positions. By legalising and regulating online gambling, both sports and online casino gaming, states can generate significant tax revenue. This is a much easier way and a much more popular way of raising tax revenues versus increasing tax rates on existing taxes. So personally, I think this trend is definitely going to accelerate, and for Paysafe, this is great. Additionally, its alignment to other high growth sectors such as video gaming, crypto sector are all really exciting. Ultimately what this does is it underpins some really strong growth prospects. It gives Paysafe a massive opportunity to grow much faster than its peers, who are operating in typically much more established and mature markets which are growing at slower rates. For companies operating in just the more mature markets, it's much harder for them to drive that high growth. It would require massive market share wins, which, as we discussed in the original video on Paysafe, which if you haven't seen already, I definitely recommend you checking out, it's not easy to capture market share. Customers are very sticky and there's very limited propensity to switch. So this alignment to high growth sectors, an opportunity for massive growth without having to win market share, and just growing with these markets as they grow, is really exciting and should really differentiate Paysafe from its competitors. One could easily argue that this in itself should command a premium valuation. Now, the other potential differentiator for Paysafe is actually its M&A firepower ability. Now, as part of the transaction, we saw a significant amount of debt being paid down. At current levels, Paysafe is actually very conservatively leveraged, and this ultimately means that more debt can be raised to acquire other companies. As we discussed in the previous video, this is a great value creation opportunity and it drives more growth. So again, that in itself could easily be a differentiator and why Paysafe should be valued at a premium to the market. Now, the important thing to say here is that this is all on the basis of relative analysis. It's valuation relative to peers. If there's an overall market correction and the valuation of its peers fall, then obviously in turn, the price target should fall as well. I don't have a crystal ball. I can't say where the market is going, but it's important to point that out here. The next step of my own personal analysis is to develop my own cash flow model. And of course, once I've done that, I'll share the analysis with you as well of that. One other really important thing to keep in mind here is the lockup period. Obviously, this analysis doesn't account for that at all, and I've covered it in 2 previous videos, so you should definitely check out those if you're interested. However, it is very important as investors in this stock to keep that in mind. But look, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel and you like investor related content, then subscribe. And please let me know your thoughts and comments in the comment section below. I always find there's some really interesting debates, discussions, thoughts put forward, and I love hearing those, reading them all and getting involved. So please share your thoughts below. Anyway, thank you so much for watching, and I'll see you in another video.